Hey, Jason here. So, when should you lock in a trading profit? Think about this carefully. Your answer could really influence your odds of success. You see, people often tell me that a trader shouldn't be greedy. These people like the certainty of banking a modest profit. They say it's better to sell early than risk a lower price tomorrow. But what if the price keeps rising? You know, I've seen many traders come and go over the years. One of the biggest reasons they fail is due to poor exit strategy. Their mistake often comes down to cutting profitable trades too early. This week, I'm going to put you to the test. I'm going to show you a trade from my own portfolio and ask you to think about how you'd handle this situation. I think it's going to give you a big insight to why some traders make a lot more money than others. Okay, so check this out. This is a share price chart for a company called Appen. It might surprise you that I bought a stake in this stock when it was trading at an all-time high. The shares were also up 100% in the previous 6 months. Now, I know a lot of people are nervous buying after a strong move. They reason that a stock must be nearing the end of its run. Their overriding concern is to avoid buying at the top. But this is often a mistake. You see, a strong share price is positive. I believe it's the best indicator that a rising trend will continue, and some trends continue for a very long time. Okay, here's the next chart. Buying near the all-time high was a good call. Appen quickly ran to even higher levels. My shares were up 41% in only 6 weeks. It was a terrific start to the trade. Now, this is where many traders struggle. They know they should hold, but the lure of a quick profit is often irresistible. They also fear that a correction will wipe out their gains. Think about how you'd handle this trade. Would you cash in your chips or would you let it ride? This is one of the biggest questions a trader needs to answer. And what you do could determine whether or not you're going to be a successful trader. So I'll tell you what I did. I held on. Now, letting a trade run involves risk. It means accepting an early gain could vanish. The 100% plus winners are the reward for taking that risk. This is what happened next. Appen fell 25% in just 3 days. Most of my paper profits went up in smoke. So, was not taking an early gain a mistake? Not at all. You see, letting the trade run was the right decision for my strategy. That's how I'm able to get share price moves of over 100%. You see, most of my profits come from stocks that run a long way. Banking an early profit, it caps this potential. That's why I let my winning trades run. So, what happened to Appen? Well, it turns out the sharp fall was just a correction. Here's the final chart in the series. The early sell-off is just a blip in the bigger upward move. There were other corrections along the way, but I was able to ride them out and stay with the trend. I eventually sold for a 115% gain. No, I didn't exit at the high, and that's okay. My aim is to get the big middle part of the trend. That's where I make most of my profits. And you know what? I couldn't have done this if I'd sold for a 20 to 30% gain. My willingness to give back a modest early profit has made all this possible. Letting profits run is the key to banking triple-digit winners. So that's all for this week. If you're watching this anywhere other than my website, then come over and have a look. You'll find it at motiontrader.com.au. That's where I have all the free stuff. I think you'll like what you'll find. Also, scroll down and leave me a comment. I'd love to hear if better exits could improve your results. So until next time, I'm Jason McIntosh, and let's find some trends this week.